684,000 jobless claims last week. That is the lowest in 52 weeks. The first time we've been below 700,000 in 52 weeks a year. And it was a year ago this week, not the last week numbers that we're getting now, but it was a year ago this week that we saw a peak in jobless claims and they started to come back down. So this is big news for the markets. They should react to this. The forecast was for 730,000. The prior week initial estimate was 770,000. Continuing claims fall to 3,870,000. So a decrease this week of about 97,000 from the previous week. The revised claim last week, let me see, don't have that. Oh, from 770 to 781. So it was revised up for last week. Now, this obviously could be revised up again, but you got 7 days to trade on a much better than anticipated number in terms of jobless claims. The number of pandemic claims out there this week, or actually a week ago, because that one's delayed a week, 241,745. That is a decline of 42,500. So all in all, really good news on the jobless claims front. I mean, 684,000 is still higher than the highest we had previously during the Great Recession, but it is a significant change, significant move lower, breaks through that psychological level. Jobs claims not the only number out today. GDP for the fourth quarter, stronger than anticipated, comes in at 4.3%. It was 4.1% when the second estimate was put out. Personal consumption up at 2.3% annual rate. That's a little bit lower, so we probably got more in terms of inventories. I don't have the complete breakdown yet. Here we go. Just coming out. Let's see here. Business spending, non-residential fixed spending falls to 13.1% instead of the 14% last month. So that tells you that we're probably looking at inventories much higher and maybe trade making a difference. But I haven't got those numbers right in front of me.
You said something important I want to pick up on, this idea that the market should respond to these much better than expected numbers. Good news across the board about the economy, about employment. The market is not responding much. If you're actually taking a look at yields in the longer end, they're going up maybe a little bit, but they're basically flat on the trading day at best. And meanwhile, the Russell 2000, if you take a look at futures, is still down by almost 1%. Yes, retraced a little bit of the losses, but not a significant move. Can you give us a sense of how much people actually can rely on this data, or whether it's increasingly dismissed as noisy and backward-looking?
Well, the jobless claims numbers have a lot of problems. There's no question about that. There's been a lot of fraud, a lot of double counting, poor counting by states with antiquated systems. But the direction, at least, is going the right way, and the magnitude of the change is large enough that you have to give it some credibility in terms of what it means for the overall economy. And the story has been that things are improving, and they will improve more rapidly. So this is a ratifying number, put it that way. You don't have to care about the actual number, but the idea that we are going in the right direction is ratifying. And when I say the markets might react in this first 5 minutes, maybe not, but over the course of the day, you might see a little bit more optimism that people who are betting on a stronger economy are going to be proven right. And so that may influence some trading later on here.